Hello investors, welcome back to your number one place for all your investing needs. Today we're going to be discussing the top 5 stocks for the last week of June. Now these are going to be stocks that are hot right now and I see long-term potential in them, with markets obviously recovering slowly from those March lows that we had at the beginning of the year due to the Rona that was going on and all the stuff that caused the market to drop. Now these are some good buying opportunities, and some of these stocks are actually driven by this shutdown, as you could say, because people are buying certain products, and that is causing some of these companies to make major profits. Now before we get into the countdown, guys, can we smash that like button for me? Can we get over 200 likes on this video? I would really appreciate it, guys. It helps the channel and the algorithm. So also, if you guys want to subscribe to the channel for more content like this, and leave a comment below letting me know what stocks you're going to be buying right now, or what stocks you're looking to in the next couple of weeks or months for some potential. Alright guys, so the number 5 pick on our list for the last week of June is going to be ticker symbol SNE, which is Sony. So Sony is currently trading at $70.98. It's actually down about 57 cents on Friday at the close. So Sony Corporation is a Japanese multinational conglomerate corporation. Its diversified businesses include consumer and professional electronics, semiconductors, gaming, entertainment, and financial services. Now, obviously, as if you guys are following anything, even if you're not trading stocks, if you're new to stocks and you're on social media, you will see that there's a lot of talk about the PlayStation 5, and they were dropping all how it's going to look and all this other stuff with it. So that is something that Sony has coming up. There was a lot of hints coming that it was going to happen around the 2020 holiday season, and the PS5 was going to come out. So obviously that's going to be something huge for Sony, and that's going to really help the revenue for that quarter. So if we take a look at Sony right here, they actually have a PE of 16.61. They have a dividend rate of 41 cents, and which is a yield of about 0.58%. So it's about a 0.5% of a yield. So it doesn't really have a huge yield, but it's something at least. And their market cap is 86.96 billion. So if we take a look right here, Sony was trading down here at a low, probably around $51 per share, and that was in the March lows when that happened, and it's been recovering slowly, and it's almost at the all-time highs right now. It's almost there. It has a few more dollars to reach that. If we take a quick look at their dividend, like I just talked about actually earlier, 0.22 cents, like it says right there. Their dividend yield right here, 4-year average yield, 0.5%. So it hasn't really went up at all. It's been staying steadily right there. But it says years of growth, 4 years. And then if we take a look at their dividend history, obviously down here it was like 0.09 cents semi-annually. So you only get this one twice a year, and now it's about 0.2276 cents. And dividend safety, payout ratio of 14.43%. But Sony, I see a lot of potential with Sony, obviously, and the whole gaming industry and all that stuff right now is really booming. But Sony was doing really good, obviously, before all this Rona stuff was going on, and then it took that dip, and now it's just coming back to those highs, and hopefully it can recover and keep on trending up as it was before all this happened. All right, our number 4 pick for the last week of June is going to be ticker symbol PFE, which is Pfizer. So Pfizer is a multinational pharmaceutical corporation. It is actually one of the world's largest pharmaceutical companies. Currently, it's trading at $33.42, or it went up about 18 cents or 0.5% on Friday at the close. So this one was trading at around $40.50 before all this happened. Went down to about $28 low, a little bit lower than that, and then it came back up to about $38, $39, and now it's been trending down. Obviously, they had some negative news with the I believe it was the breast drug trial that happened. So that kind of brought the stock down. But we have to think about it this way: Pfizer does have, it's one of the competitors in the race for the Rona vaccine. They're trying to be the first ones to get the vaccine going. Obviously, we have other big competitors like Moderna. We have Johnson and Johnson, and a lot of the companies are fighting for this. But Pfizer is one of them as well, and that could be some potential if they release some news in the upcoming weeks or months. That could definitely drive this stock, in a positive way, depending on what happens. They have a PE of 12.27, dividend rate of $1.52 with a yield of 4.55%. That is a very decent yield actually with Pfizer. 4.5% dividend. That's beautiful to see. I like that. I actually own some Pfizer, and I plan on hopefully adding some more depending on what happens in the upcoming weeks. Hopefully I can get a little bit of a nicer dip. If we look at their market cap, it's currently at 185.64 billion. If we take a look at their dividend, actually, let's take a look. It's 38 cents right there. Their dividend yield, 4-year average yield is about 3.76%, but it's been slowly increasing on up. If we take a look at their dividend growth, years of growth, they've had 10 years of growth. That's wonderful to see. It was down here about 72 cents, 80 cents, broke a dollar, and now it's currently at $1.44. With their dividend history right here, we can see that it's been increasing, and it is a quarterly paying dividend. So every quarter you're going to be receiving dividends from this one, about 38 cents. Their dividend safety is about 55.79. It's been increasing obviously now since the ending of 2019. But Pfizer, definitely one to keep an eye out on, especially with all this, Rona stuff going on. Everybody is looking at the vaccine and who's going to be the first one to get a positive test result. All right, coming in hot at number 3 is going to be Clorox Company. So ticker symbol CLX. So this is an American global manufacturer of consumer and professional products with approximately 8.7 thousand employees worldwide as of June 2018. So the net sales in the company for 2019 fiscal year were $6.2 billion. That's huge. That is very, very huge. Currently trading at $217.64, up about $3 on Friday, or about 1.5%. This stock is booming. I mean, take a look at this. So right here, March had actually went up. It went from about $158 to about $197, then dropped back down, and then we've been trending back up, breaking through the highs and making new highs and higher highs. Obviously, with the Rona situation, like we just talked about, everybody needs Clorox. We need a lot of disinfectant wipes, things like that, and they're flying off the shelves. These companies are putting them on the shelves like Walmart, and they're disappearing very, very quickly. People are buying them out. People are panicking a little bit too much, actually, and the companies are having to mass produce these products in order to, make enough supplies for us. So this stock is booming, and I believe that earnings are going to be extremely, extremely good in the next, couple months or even year, because people are going to be definitely buying more of this, and that's going to be meaning more revenue, more profits. They have a PE of 31.57, dividend rate $4.44, with a yield of 2.04%, so about a 2% yield, not too bad. Market cap currently is at about 27.41 billion. But Clorox, obviously, we're not investing in Clorox for the dividend, but let's take a look. It's $1.11 with a dividend yield right here. If we take a look at their dividend yield, 4-year average yield is about 2.5%, so it stayed consistent around there. Years of growth, 18 years of growth. So that's nice actually to see in this one. They've been growing their dividend for 18 years, and it's currently at about $4.04. If we take a look right here at the dividend history, obviously it's a quarterly paying dividend, and it's paying about $1.11 per quarter, with the dividend safety payout ratio 64.4%. Like I said, Clorox is just one of many, many companies that is benefiting right now, because they need to, put out a lot of supply for us. There's many other companies that I could have added in this video, like Procter and Gamble, obviously, toilet paper and things like that they're selling. They're flying off the shelves as well, obviously. Stocks like Campbell, soup is getting bought up, cans are getting bought out, all those stuff. McCormick, spices. A lot of people are cooking more at home, which means people are buying spices from the stores and things like that. So McCormick is another positive one to to look at. But there's just many, many stocks that are benefiting from this, and this is just one of them on my list. Number 2 on our list for the last week of June is going to be SunRun, ticker symbol RUN. So a lot of you may not know this company, but this is a United States-based provider of residential solar electricity. California, obviously. This stock is very similar to Enphase Energy. So if any of you guys are invested into Enphase Energy, very, very similar company. Just like them. Obviously, I actually invested in Enphase Energy last year or beginning of last year, and I had a very, very decent run as the company was growing. If you guys follow any of the solar panel companies, you guys know that Enphase Energy had some negative news last week with some companies, or something, negative news that came around about their profits and how they were, not telling the truth on the profits. But nobody knows if that's true or not right now. So the stock kind of plummeted just on negative news that came out. We don't know what is actually going on around the stock, but the stock is kind of consolidating and coming back up slowly. So Enphase Energy, if you guys haven't checked that one out. But SunRun, very similar. Obviously, in California, people need to have solar panels. So this is a company that is going to be benefiting from that because they're going to be making a lot of money. Obviously, setting up solar panels for these customers all over California, and hopefully maybe even expanding further out. Enphase Energy, same thing. They're currently trading right here. SunRun, $19.89, up about 10 cents or 48.48% on Friday at the close. They do not have a dividend, obviously, no dividend for them. They have a market cap of $2.39 billion. So this stock was trading around a high of about $22, $23 up here. And then as the Rona thing happened, it crashed down to about $8. This was a great buying opportunity. I don't know how I missed this one. I must have been blind. I mean, this was the golden opportunity to buy this stock at $8. Wow, that would have been a steal pretty much. But yeah, we did kind of miss that out. But now it's just been trending on up slowly throughout the past 2 months and currently trading at about almost $20, actually $20 after hours right there if we see. But this stock is beautiful. I see a lot of growth and potential with it in the long run. SunRun, definitely one to keep on your count. Okay, and our number one pick for the last week of June is going to be PayPal, ticker symbol PYPL. So this is an American company operating a worldwide online payment system that supports online money transfers and services as an electronic alternative to traditional paper methods like checks and money orders, obviously. So PayPal did amazing. If we take a look right here in the past 6 months, here after earnings, they rocketed from about $120 all the way up to about $146. This stock is doing amazing. If we look at the 1 year, it's up about 40.31%. It was trading at a high of $124, dropped down to about somewhere in the low 80s, and it's went up 100% from that low in March. Now currently trading at $164.36, down about $3.69 on Friday, or about 2.2%. The stock actually hit an all-time high last week at around $171, I believe, on Wednesday or Thursday. This stock does not pay a dividend, but that does not matter with this one. Obviously, they have a market cap of $192.99 billion. But the real reason we're looking at PayPal is obviously people do not want to touch money. People do not want to, touch germs and other things. So everybody is using these other payment methods like PayPal. So people want to do something that doesn't involve, interaction with other people, and PayPal is the thing to do. You can just go ahead and click a few buttons, and your money is transferred to somebody else. Your payment is gone. Your payment goes through. You can do online shopping. You can do many things like that. And PayPal is benefiting from this, and the stock is, as you can see, shooting on up. They have earnings coming up in July, obviously, and I believe that they're going to destroy the earnings. PayPal has nowhere to go except up. There's other stocks, I believe Square just broke $100 per share. A lot of these online, financial companies like this are really benefiting from all of this negative Rona stuff, because people are moving to online things. Just like when I made a video about the cloud-based stocks like CRM or VIX or Cloudflare or any of those stocks like that, they're all benefiting because people are moving to online. People want to use the online, and a lot of companies are actually noticing that moving online is actually saving the companies more money, so they can actually hire more people and actually still profit a lot more just from people working from home. So a lot of companies are noticing that working from home is actually benefiting their companies in a positive way, and they're going to continue to work from home, which is a good thing because that means less interaction between humans, and that means the diseases will not be able to transfer between each other as easily as they could before. So this is very positive, actually. There's always light at the end of the tunnel, so we're always going to see positive things even in negative situations like this. So guys, that's the list for the last week of June. Obviously, June has been a wonderful month for us. Stock market has been doing decent. It's been continuously going higher and higher. Obviously, we're having a little bit of pullbacks every once in a while once we get some negative news about reopening the economy. We had a day or two where we dropped down about 1,000 or 1,700 points for a day, but that was just a slow drop, and then we continued to trend on up for 4 or 5 days in a row, obviously. And then obviously we're going to have some pullbacks, but that is normal. Obviously the market cannot continuously just trend on up or trend on down. It has to have some hills right there and valleys. It can't just continuously go one way. That's not how the market works. And obviously, if you're actually following a lot of the stock market news, they're saying that we're in a kangaroo market right now, which is something new. I've never heard of this kangaroo market. I only knew about bull market, bear market. Well, now they're saying, the stock market is going to start going sideways. It's going to go up, then it's going to go down, it's going to go up, it's going to go down, and continuously do this, which is why they're calling it the kangaroo, because it goes up, down, up, down, up, down, and it's staying in this pattern right there. But that is just something that these people are coming out with. Obviously, we're either in a bull market or a bear market. You can't be in, there's no such thing as a kangaroo market. It's just trading sideways right now or consolidating at a current spot right there. But obviously, these stocks all are going to be either benefiting from this Rona season and stuff that's going on with the Rona. Obviously, with a lot of these states opening back up, some of them are having to close back down, but some of them are actually still doing good. So I don't think we're personally going to have a second shutdown. Hopefully not. I mean, if we guys listen to the president, he said that he would not want to do that again because it would cost too much money for these companies, and we do not need America to shut down, again and lose lots of money. But like we said, Clorox, everybody's going to be going out and buying these supplies. PayPal, everybody needs to use online, payment methods. Stocks like this are going to be benefiting from this. Then we have some, tricks up our sleeve right there. Like we said, SunRun, obviously with solar panels. People are moving to solar. That's going to be a huge thing in the next couple of years, probably in the next decade. So yeah, people are moving to these new type of alternative methods, and that is going to be pushing us to create new ways of living, I guess you could say. This is the new way of living, and that's something we have to live with. But yeah, so I hope you guys enjoyed this list, and if you did, go ahead and smash that like button for me. Let's get over 200 likes on this video. Make sure you subscribe to the channel for more content like this. Leave a comment below. What do you guys think about these stocks? Do you own any of these stocks in your portfolios? I hope you guys enjoyed this, and I hope that you guys look at my other videos, and I hope to see you next time. Goodbye.